Okay, good morning. This is Rick Marr. I'm going to allow people to join another few minutes. There's a little bit of a backlog on the system, probably some overflow or some traffic jams on the internet highway. So again, my name is Rick Marr. I'm the CEO of Turning Point Human Capital Management. We are a fractional human resources businesses with 24 human resources professionals. We started this business in January 2010 in the depths of the Great Recession. So, we understand what hard times can do to companies and their employees. And since we've started it in 2010, we've worked with more than 900 businesses dealing with all aspects of human resources. And since we deal with so many companies who all seem to be asking the same questions, we've decided to share with you what we know to this date and time, and how it relates to the CARES Act and the Economic Injury Disaster Loan, SBA loans. And we have a panel expert on the line who will answer all of your questions at the end of this session. The intention is for the presentation to take 20 to 25 minutes. And then we will open it up to questions and answers and answer all your questions with our SBA lending expert, Jason Kohl. So as a housekeeping item, we are recording this presentation. It will be posted on our website, which is where you registered, Turning Point HCM /webinars, within a few hours of this session ending. Jason, I'm sorry, there is a chat function and a Q&A tab on your screen. So there will also be a 3-question survey at the end of this session. We'll email that to you directly. We'll ask you to complete that. And please use the Q&A tab or the chat function to ask any questions that you may have. We'll try to get to all of them at the end of this session. And we're going to hold all answering of questions till the presentation is over. So why are we here, right? That's a great question. So we're going to stay focused on one thing on this call, and it's how to help business owners get the money they need with the current choices that are available through the 2 SBA programs. The first is the Economic Injury Disaster Loan with EIDL or EIDL, and the second is through the Payroll Protection Plan, PPP, which was recently passed by the House and Senate and then signed into law by President Trump on March 27th, 2020, which quite frankly seems like a million years ago. As you can imagine, there are questions surrounding calculations, definitions in an 880-page, $2.2 trillion bill. Those questions sometimes require further guidance. Literally daily, we're still getting updates on what's happening, why things are happening, what banks are having success, etc. Since some of this information, in this session may be updated in the next coming days, we will monitor those changes, and if they become significant, we'll reopen up this discussion and send out more invites. But otherwise, as things change, we're monitoring them, so we encourage you to give us a shout, give us a call, should you need some help. So as I mentioned, on the line, we have Jason Kohl. He's the owner of Kohl Capital Associates, an SBA program specialist. He's an expert in all areas of SBA funding and has been advising clients for many years. He is a Sandy veteran for those of you in the New York, New Jersey area and dealing with the SBA loans at that period of time. So he has quite an extensive understanding of how these things work and how the SBA and other organizations jump into action or mosey into action when these things kind of happen. So he's an unbelievable resource, and it can help any business, as he's already helped Turning Point HCM. Jason will be answering questions, as I mentioned, at the end of this presentation. Additionally, I would like to recognize the Turning Point's banking and accounting team, as they are on the webinar as guests, but not panelists. First, Devin Kiernan. Devin is the Associate Group Director and Vice President for Signature Bank in Garden City. And second is Michael Focus. He's a partner and CPA at JT Schulman and Kohl in Carl Place. They've both been tremendous resources, partners, and friends. So thank you for everyone who's stepped up to help decipher all the moving parts of this behemoth legislation. That is important to all of us in as it's defined small businesses. The landscape as it stands today. So, just to kind of give you sort of a history lesson, the declaration of a disaster was on March 13th. President Trump declared the COVID-19 a national emergency. With this past weekend, the 50th state was named as a disaster. So now it covers all 50 states are included in this disaster. This authorized the SBA to implement the Economic Injury Disaster Loan, EIDL. This program is meant to inject smaller amounts of cash into businesses. On March 27th, 2020, President Trump signed the CARES Act, which stands for Coronavirus Aid, Relief, and Economic Security Act. It too is intended to assist business owners with whatever cash needs they have right now. So obviously many of us have applied, some have been approved and have been funded, and others are waiting for those two things to happen. So the first one is the Economic Injury Disaster Loan. What is it? The Small Business Administration's disaster loans are the primary form of federal assistance for the repair and rebuilding of non-farm private sector disaster losses. The disaster loan program is the only form of SBA assistance, not limited to small businesses. The Economic Injury Disaster Loan program can provide up to $2 million of financial assistance. The actual loan amounts will be based on the amount of economic injury and your business's particular circumstances. So it provides those loans to small businesses or private nonprofit organizations that suffer substantial economic injury as a result of the declared disaster, right? Regardless of whether that applicant sustained physical damage, right? So many times we think of disasters as, there was some, terrible news out of the Southeast today, this weekend with tornadoes and those sorts of things, and thoughts and prayers to those folks. But so typically, it's always been these physical damages. Well, in this case, it's a invisible damage, right? We're all dealing with it, so every business in the United States is eligible for to apply for an EIDL loan. So what's it used for? An EIDL loan can help you meet, necessary financial obligations that your business or private nonprofit organization could have met had the disaster not occurred, right? It provides relief from economic injury caused directly by the disaster and permits you to maintain a reasonable working capital position during the period affected by the disaster. EIDLs do not replace lost sales or revenue. So the general program requirements. So to be eligible for EIDL assistance, small businesses must have sustained economic injury and be located in the disaster declared county or contiguous county. Well, it's the entire United States, so that shouldn't be an issue. And the loan terms, the SBA can provide up to $2 million in disaster assistance to a business. The $2 million loan cap includes both physical disaster loans and EIDLs. There are no upfront fees for these loans or early payment penalties charged by the SBA. The repayment term will be determined by your ability to repay the loan, right? So absolutely everyone should be on that, applying for that. We'll show you the website and all that stuff, how to apply next. So how to apply. Like most programs, there has been a level of self-service, and there will be those that are in need of professional service navigating the SBA process. For those that are do-it-yourselfers, here's the information to start your application. The application process to apply online for disaster loan assistance is through the SBA.gov. And if you'd like to call, there's the phone number, 800-659-2955, or there's an email address there, you can see it. Or you can use a professional, right? So the big question comes of people is, should I get help or should I do this myself? And there are SBA consultants and direct lenders who've been doing this for years, like Jason, who's on the line, to answer your questions. So it's up to you to decide if you want to take advantage of that expertise to expedite the application process. Additionally, people like that, they know the ins and outs of the application process, and that expertise could be the difference between a quickly approved loan and one that goes to the bottom of the pile. So there is some anecdotal conversations going around about this program over the weekend. There were some published news reports, on some major, news websites, and additionally some anecdotal conversations that people had with the SBA directly. But essentially, the money that was approved through the legislative process, if you divide that by the number of businesses that have applied, that comes out to $15,000 per business. Now, in some cases, a $15,000 loan to a business might be a tremendous amount of money, and to another business, it might be a drop in the bucket. It depends on your business. But from a budgetary standpoint, the math is pretty simple to understand. So there's still some guidance coming out on that, and what's going to happen there, and are they going to provide more funding for those things. Additionally, everyone, when they applied, it said that there should be $10,000 in your bank account within 3 business days as a grant. Again, anecdotally, we've heard a minuscule number of people who have received that, if any, right? It's like one, and it's kind of anecdotal, if you will, a friend of a friend of a friend kind of a thing. So we're monitoring that as well. So the other side of it is, if there is more funding, the intention that we're getting guidance on now, again, this is not completely clear, Jason can address this at the end of the session, is that the goal is to have 6 months worth of operating expenses to a business, for that loan, should the funding be there. That money will most likely come with additional questions, right? So like applying for any other sort of loan. They might miscalculate what your number was to the low side. So you might have to go back and provide additional documentation. So you might want to think about what professionals you're going to put into your network that are going to help you should this program change, which we expect, just from the conversations and things that we're hearing and the news articles, will happen over time. So having a good professional on your side could be the difference between getting funding and not getting funding, or getting the funding that you need and not getting the funding that you need. So we'll address that later. Okay, the next is the CARES Act. What is it, right? So the Patient Protection Program, PPP Loans. This program would provide cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during this emergency. If employers maintain their payroll, the loans would be forgiven, which would help workers remain employed, as well as help affected small businesses and our economy snap back quicker after the crisis. It's no surprise that everyone probably has read the news over the weekend. Last Thursday, an additional 6.7 million people applied for unemployment, which brings the total to about 17 million people in 3 weeks have been laid off. Obviously, that is, as their definition, is a crisis, right? And we understand that there'll be more, because there's a backup with within the various unemployment insurance at the state level. So that number is probably going to climb significantly. So the PPP is designed to keep those people at work, and it has a host of attractive features, such as forgiveness of up to 8 weeks of payroll based on employee retention and salary levels. There'll be no SBA fees, and at least a 6-month deferral with maximum deferrals of up to a year if some of that of some of that money has to convert to a loan at the end of the process. Small businesses and other eligible entities will be able to apply if they were harmed by COVID-19 between February 15th, 2020 and June 30th, 2020. This program would be retroactive to February 20th in order to help workers who may have already been laid off back onto payroll. So if you have already laid people off and then you get your funding sometime after that, the goal is to bring those people back onto your payroll as part of that loan and its forgiveness. Oh, sorry. So what types of businesses are eligible? So those that have been in business before February 15th, 2020, any small business concerned with less than 500 employees, individuals who operate as sole proprietorships or independent contractor and self-employed or eligible self-employed individuals, right? And any business concern that doesn't employ more than 500 employees, right? So you can see those definitions there. How is the size of the loan determined? Depending on your business situation, the loan size will be calculated in different ways. The maximum loan size is always $10 million, okay? So here are some ways to calculate. I'll let you read that for a moment. And this is typically where people who have questions will ask Jason at the end. But the maximum loan is $10 million, okay? If you took out an economic injury disaster loan between February 15th, 2020 and June 30th, and you want to refinance that loan into a PPP loan, you would be able to add the outstanding loan amount to that payroll sum. So for those that have received an EIDL loan, you can, as mentioned, roll that in there. So what costs are eligible and not eligible for payroll compensation under this plan? So compensation, salary, wage, commission, or similar compensation payment of cash or equivalent, payment for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group health insurance, group health care benefits, including those premiums, payment of any retirement benefit, 401k, those sorts of things, payment of state or local tax assessed on the compensation of the employee. What's not included is compensation for anyone over $100,000. So whether it's an employee or an owner, into that calculation or what's eligible is only the first $100,000 for any employees or owners making more than $100,000. What are allowable uses of the loan proceeds? So those payroll costs, as described on that previous page, costs related to the continuation of group healthcare benefits during the period of paid sick, medical, family leave, and insurance premiums, employee salaries, commissions, or similar compensations, payments of interest on any mortgage obligation, right? So there's a lot of things that can go into this calculation. So again, you're going to want to have someone on your side, a professional who understands how this stuff works, so that when you go for the loan forgiveness, you have the right calculations ready to go. So things like rent are included, utilities, and interest on any other debt obligations that were incurred before the covered period, which was February 15th through June 20th. So once you get a loan and you use it, and it's 8 weeks from now, how do you get the loan forgiveness, and how does that calculate? How is that calculated? So forgiveness on a covered loan is equal to the sum of the following payroll costs incurred during the covered 8-week period compared to the previous year or time period, proportionate to maintaining employees and wages, and that excludes the compensation over 100. Payroll costs plus any payment of interest on any covered mortgage obligation, plus any payment on any covered rent, plus any utility payments. This all goes into the calculation. So all of these things that you're going to be using this money for, rent, utilities, mortgage, health insurance premiums, those sorts of things will all go into the calculation for loan forgiveness. So getting loan forgiveness, you must apply through your lender for forgiveness on your loan. So wherever you get the money from, that's who you must go back to. So you're going to have documentation verifying the number of employees on payroll and pay rates, including your IRS payroll tax filings, state income, payroll, and unemployment insurance filings. Documentation verifying payments on covered mortgage obligations, lease obligations, utilities, etc. Certification from a representative of your business or organization that is authorized to certify that the documentation provided is true and that the amount that is being forgiven was used in accordance with the program's guidelines for use. So obviously no one has gone through this process yet because we're certainly not past the 8 weeks of anyone getting that money. So clearly you're going to want to have really good documentation. You're going to want to be tracking this stuff and understand, kind of where this money is going and tying it back to your loan and the lender. Okay, so where should I go to get a PPP loan and who is going to help me, right? So I think we've heard stories of many people who have gone to different places for the money. Some have gotten tremendous responses. Some have gotten lukewarm responses, and some have gotten no response. So really, you need to think about where your banking relationships are. And if that banking relationship is not being as proactive as you like, then there are other folks out there. There are other opportunities. That's why we have Jason on the line, because he's a direct 7A lender. He's been very successful in getting processes submitted. And, as part of the process, he understands how it works. And really think you should be thinking about, where am I going to go to get this if I haven't gotten it already? And who is the person that's going to help me? So thank you for joining us. Now we're going to start to open it up to answer Q&A. Here is our contact information. Please feel free to reach out to us with any questions we may not get to today. We will also be posting this webinar on our website within a few hours. And as mentioned earlier, you will be receiving a simple survey. If you can complete that, that really helps us monitor what is happening in this world and what resources we can then bring to the next series of webinars. So with that said, I'm going to open it up to the first question. And the question comes from Ken. Does workers' compensation, let me see here. Let me make sure that Jason can hear us. Hang on one second. Jason, are you there?
Good morning.
Good morning. Okay, so we're here. So let me read you the first question. Does workers' compensation, life insurance, and enhanced disability insurance get added to the benefits calculations?
That's a good question. Very, very widely asked. Items like workers' compensation is an item that gets included in the calculation of the maximum loan amount. Things like life insurance and disability insurance are not included in that. Unemployment insurance is, and some people, a small amount, pay the MTA tax, things like that. So state and local taxes are included, but not the disability insurance or life insurance.
Okay, great. Thank you. Okay, so let's go here. Okay, this is from Chris. Does EIDL have any forgivable, it's a two-part question, so let's ask them in two parts. Does EIDL have any forgivable elements?
Well, the first off, the EIDL promises a $10,000 advance, which is basically a forgivable loan known as a grant. So that's part of it. Once the loan gets offered from by the SBA under the EIDL, you would accept it, or decline it, or take a lower amount. It's your choice. But the EIDL is compatible with the PPP in terms of you can combine or refinance basically the EIDL through the PPP. Now, under certain circumstances, if the numbers work out properly and the use of funds was done and coordinated appropriately, then that piece of the EIDL that gets rolled into the PPP can, in many cases, from what I've seen examples of from the SBA, can be forgivable. So if it's done right and coordinated in the right set of circumstances, it's possible that whatever piece of the EIDL goes into the PPP could be forgivable.
Great, thank you. So the next question from Chris is, do either EIDL and or PPP require personal guarantees? Right.
So the both programs, EIDL and PPP, broadly follow the 7A guidelines. So the big rule book of the 7A SBA lending applies. However, both of these programs have been stripped of many elements of the normal rules. So personal guarantees on the PPP do not apply. Now, from the EIDL standpoint, the loan program goes up to $2 million. I've heard, I haven't seen it in writing, and I've seen some credible reports from the SBA that the EIDL has no guarantee when the loan is up to $200,000. Over $200,000, I believe they will be requiring a personal guarantee, which will come out as part of the post offer work that needs to be done to comply with the SBA and the EIDL.
So thank you, Jason. Can you just expand a little bit on, so for many business owners, our introduction to SBA EIDL loans was you go on SBA.gov, you fill out a 5-page web page thing that takes 15 minutes to do, and that's it. So from your experience, so that is what's going to generate potentially an offer to a business. Then what's your sense of what's going to happen once the offer is made? Is it going to be more paperwork? What's your sense there?
Right. So based on the work that I did on the program after Sandy, I worked with hundreds of clients in raising the capital that they needed to survive after the storm. The program, the disaster program as it exists, was cumbersome on the way in and challenging on the back end in terms of analysis and verification and just telling the story that demonstrates what's required, what the business needs to survive. The good thing that occurred in this circumstance, they reinvented the website, the entry point for the EIDL program, and it's really streamlined it. I think they did a great job. So the intake application is very brief and quick. So now on the back end, depending on the loan amount, I'm assuming, it's a safe bet that there'll be more work to be done, additional information, and they have to come up with a number that is suitable for your business to take you from now till whenever this may end. Is it 5 months, 6 months from now, where you need that support to get your business back up and running? So yeah, they will definitely require, at least for the larger amounts, more work, which would be analysis, information, presentation, and really just demonstrating what the company needs to survive.
So thank you. So Thomas asked a question. I think it dovetails nicely with that last comment. It's going to be important to think about who your team is to bring you through this process, right? And Thomas asked, can you please post Jason's email and contact info. Thanks. As you can imagine, Jason is overwhelmed, and to keep him and help him be as efficiently as possible, part of the survey that's going out is going to ask, do you want him to contact you? Because like anything, he's in tremendous demand right now. He's a tremendous resource, and him even giving us this time today is truly valuable, and I thank him for that. So if you want to get in touch with Jason, we're going to send you the survey right after, and it just says, yep, check, I want to reach him, and then we'll facilitate making that time happen, just because time is of the essence. So thank you, Thomas, for that question. All right, so next question. Will PPP run out of money, and will early applications help?
Well, the money is flowing. Some companies have started to get money and funding. You hear a lot of different numbers thrown around, but it's definitely starting to work. So this week might be a very critical week where all sorts of things will be happening. So will it run out? I don't think the federal government will allow it to be depleted and end until the problem is solved. So they will keep coming in with rounds of funding according to what they say. I think they're arguing it through Congress right now. So will it run out? One round after the other will keep coming. So I think there'll be help for everybody at some point.
Okay. So Paul has two-part question. If you have a business banking relationship with more than two banks, can you apply to both and see which comes faster and perhaps higher amount awarded?
Well, the higher amount awarded isn't really up to anyone's judgment or anything subjective. It's a formula based on payroll costs. Payroll costs consist of very specific things, which is no matter where you apply or what you do, that's what you are applying for, and that's what you're responsible for to be accurate. The bank is not responsible for that being accurate or precise. You're doing the calculation and you're signing off on it. You're providing the backup material that demonstrates what you are applying for. So it doesn't matter where you apply to. It's you won't get a higher amount at one place or another. Can you apply to two places? I've heard it happening, but you cannot take the loan from more than one candidate, more than one lender at a time. That's for sure.
Okay. So the second part of that question, do you add additional costs to the monthly average payroll and multiply by 2.5? And if not, how do you add the other costs in the forms?
I think you're referring to calculating the loan amount versus the use of funds.
Okay,
so the loan amount is very specific payroll costs, W-2 employees, the litany of things that we went through earlier, workman's comp, unemployment, but mainly the driving force there is the wages paid. The use of funds, however, can be payroll plus utilities, rent, mortgage, overhead items such as that. So, but to calculate the loan amount, you do 2.5 times your payroll costs.
Got it. Cool. And you asks, for the PPP forgiveness, can it be used to pay the owner's salary? For employees who make more than 100K, is his salary excluded completely, or what is above 100K is excluded?
Great. So the $100,000 rule is in place for all employees, including any owners that get paid. Anything over 100,000 is excluded from the calculation of the maximum loan amount. So yes, the owner's salary is included, just like any other employee.
Great. Okay, thank you. Here we got another question. Can you apply for an EIDL loan after you submit an application for PPP and then get it rolled into PPP?
Yes. The date of application is not coordinated or contingent upon each other. Nobody's gotten the EIDL yet, so no EIDL can be rolled into PPP as yet. So, as soon as people get the EIDL, it can potentially be rolled into the PPP if it fits in that circumstance.
Okay, great. Okay, can you increase PPP loan to, this is from Andrea as well. Can you increase PPP loan to accommodate getting EIDL loan?
Can you increase? Well, the PPP is driven by a strict formula of payroll costs. That's really what it comes down to. So I don't think that that the ideal amount comes into play.
Got it. Yep. Okay, cool. So Thomas asked, I've applied. Okay. All right. Let me just. Okay. So let me just interpret this. He applied and added commission salesman into the formula because they were told prior to the TP application that they put in the application that 1099 labor was to be considered. Now it says that it isn't. There isn't a way to modify current applications.
Right. Well, the guidance, I guess it was March. I don't know when it was exactly, but there was guidance provided, and that changed the rules. From original thought process was to include 1099, and then it did not. It'll. I mean, you can't go back and amend your application. The lender will probably pick it up and exclude it. That's all. But if you in good faith you applied based on the rules at the time, which is perfectly fine.
Okay. The next question: are there any means in place to track these applications, either EIDL or PPP, by the application numbers they have given?
Yeah. Right now, there's no tracking system or ability to say, "Hey, where's my file?" through the SBA and EIDL. It's a dead zone until they come up with the final funding and make legitimate offers to people or change their system. There's no way to do that. It's really just a waiting game at this point. PPP, that's up to the individual lender. Theoretically, they're supposed to get the money out very quickly. So, tracking status, if it in a perfect world, will be, not really relevant, but we'll see. And again, it all depends on the particular lender where you're going through with the PPP.
Got it. Great. Well, I think we've answered Jason's answered all the questions. So I want to thank him. I know just from speaking to him, literally every day, he's starting work at 4 o'clock in the morning and ending at 3:45 a.m. So he is burning the candle at both ends, and I'm not exaggerating. So I want to really truly thank him. I want to thank everyone for joining us. I want to wish everyone stay safe and healthy, and my fingers are crossed for everyone to get what they need to keep their businesses and their employees and teams working. As I mentioned earlier, there will be a short survey sent out as soon as this call ends. I do ask you to fill it out because it helps us kind of put together information. If you'd like to talk to Jason directly, you can fill out on that application there, and he will make sure that happens. And Paul just said thank you. So Paul, thank you for joining us. And if there's anything we can do to help, please just reach out, and wish you all the best, and have a great day, everybody.
Thank you very much.